Hi, Jonathan York, Bear Financial Partners, looking at investment markets. Only sort of a couple of weeks into this new year, but already quite a bit has happened. You've got stronger data coming out of the US. Latest CPI data was a little bit stronger. Also, some pretty robust retail sales as well, which all points to still a pretty resilient consumer out there for the US economy. Now that's pushed the 10-year back well above 4%. Only a few weeks ago that was trading well below 4%, to sort of 390-ish. Currently around sort of 406 and change. Two-year though continues to be under a little bit of sort of downward pressure out there, currently around sort of 425. Now also as well, you've got Fed officials there. The latest one was Fed Waller coming out and sort of suggesting that maybe rate cuts might just need to be tempered just a little bit, trying to just pour a little bit of cold water on some of the sort of steam that had been created after the sort of end of last year, where the Fed sort of signaled that 3 rate cuts were on the cards for this year. But most analysts and economists are still expecting the Fed to sort of cut interest rates between March and June of this year. And that'll be the first cut for over 2 years. But also as well, obviously, you've still got to bear in mind there's still quite a bit of money sort of sitting in the sort of cash and sort of on the sidelines, sort of money market funds, around sort of just under $6 trillion in the US. And obviously, if rates do start to fall, then some of those funds will be looking for a new home. Also, as well, we've still got Davos taking place this week. Sort of hot topics of conversation out there is obviously the ongoing Russia-Ukraine conflict. You've also got Israel and Gaza, and obviously the US election as well. Indeed, quite interesting for this year. There's going to be 87 elections globally. But obviously, most eyes will be on the US presidential election. Now, we've had the first primary in the US presidential elections, at the Iowa primary, and ex-President Trump had a resounding victory there. But then the day after, he's back in court trying to defend the ongoing sort of legal proceedings against him. So it will just be very interesting to see how this all plays out. Now, oil on the back of the sort of ongoing conflict in the Middle East and the sort of Houthis in the Red Sea, potentially sort of attacking and sort of trying to hinder shipping going through the canal. That has seen oil sort of spike back just a little bit, back around sort of 75 and change. But certainly with the Houthi rebels as well, what it does do is add a little bit to sort of shipping costs, because they are now looking at diverging around sort of the African sort of continent. That puts about 2 weeks on the journey, but also as well, obviously, additional costs as well. Now in the UK as well, pretty much like the US, a small sort of tick up in the inflation data out there. Core inflation was expected to be below 5%. That came in at 5.1. And headline was 4% when it was expected to be around sort of 3.8. So what does that do to the Bank of England sort of thinking? They meet in a couple of weeks' time. Now clearly inflation is on a downward path, albeit you've got this sort of minor sort of blip in the latest release. But it'd still be a major surprise if they looked at increasing interest rates. Also, as Rishi Sunak has sort of implied that potentially looking at a general election in the UK towards the end of the year. Now, at present, we haven't seen sort of a blip in any sort of EU inflation readings. You know, they certainly seem to have done a much better job at getting their inflation figures down. Although again, what potentially was a little bit surprising is that one of the ECB officials came out and said potentially not looking at any rate cuts in Europe for this year. Now that would be surprising if inflation continues to be on a downward path. Now in Australia, it's just going to be interesting to see the cost of the sort of recent sort of weather events, the flooding up in North Queensland and you know, sort of further down the coast. Certainly the Australian economy seems to have got a pretty a good boost over the sort of Christmas New Year period with sort of tourists and spending. Now here in New Zealand, a little bit of further good news for the dairy sector out there. Latest dairy auction was up for the 4th week running. So again, that should give a little bit of confidence out there, and you know, potentially sort of keep the revised upward payout for the dairy sector. Now, what is not such good news is that the sort of 5th wave of COVID has been sort of sweeping through the country over the sort of Christmas New Year period. Cases were around sort of 30,000 for the month. But most health professionals sort of think that you know, only about 50% of cases have been reported. So if that is the case, then you're looking around sort of 60,000 for the month. But similar to Australia, the New Zealand economy certainly benefited from sort of tourists and sort of spending, and also obviously good weather over the Christmas New Year period as well. Now, the Reserve Bank doesn't meet until February, but again, it will be a major surprise if there was any change to interest rates. So if you are looking for income options, I go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.